Hi, everyone. Welcome to this edition of Project Pro's AI Monetization Podcast. I'm Binny, the co-founder of Project Pro. As you know, on this podcast, we speak with industry leaders on what business outcomes and ROI they're seeing with AI. Very few people better to do this than Boris, who we have with us. Boris is at the leading edge of AI application out there in the industry. He's the AI ML technical lead focused on the financial services industry at Google, where he has been for over 3 years. Previously, Boris focused on solution architecture at AWS, Lenovo, HP. Boris is also an entrepreneur who started his own startup focused on NLP way before AI was cool. Boris, thank you so much for taking time to do this. Welcome to this podcast.
Thank you. And one thing I need to add to this: all of this we are going to be talking about is my personal opinion. Doesn't represent neither Google nor our customers. Just to have all of the legal details out of the way, and we can go and talk.
You're definitely at the intersection of a large company like Google and heavily regulated industry like finance. So the disclaimer makes sense.
Absolutely.
Yeah. So given your focus on financial services, Boris, I would love to understand what is unique about financial services when it comes to AI and applied AI. What makes it different from other industries?
So financial services has a large opportunity. It's a massive opportunity. If you look on the typical bank or hedge fund or others, they're working with the large amount of unstructured data. Pretty much most of the things are in the documents, in the forms, in the text. So processing it with the new technology does bring significant value. On the other hand, it does have one of the biggest risks there. Because of regulation, and you mentioned it already, is there are a lot of things which need to be made sure in the financial industry, that you are offering loans fairly to everybody, that your outputs are managed, and you can explain all of this. So there is a one big pile of the potential outcomes, potential benefits, and on the other side, the need to be very clear on how this can be done. So that's where we see, I would say, a little bit of the delay between what is possible and what is actual in production. If I'm looking on the potential, and that's confirmed by multiple studies and consultants, financial services is one of the biggest beneficiaries of the generative AI, and overall working within non-structured information, getting the structured information out of it, or having partial or full automation on the processes side. So to give you one kind of example of what this kind of challenges can be is, and it's not from my work, it's actually my personal situation. I have a mortgage with the bank, and that same bank is sending me every single month proposal or the marketing material whether I want to refinance that mortgage. And of course, unfortunately, I was lucky to have the mortgage with much lower interest rates than today. So the new offer is probably 3 times higher than I have. And of course, that bank has all the information, but because if they want to send this marketing letter, they need to get approval from legal. They need to prove that they did not send this kind of information to based on some specific protected characteristics. So it's much cheaper for them actually even send this kind of letter. They 99.99% nobody in my position would take this kind of marketing offer, but the cost of sending that offer is just negligible comparing to the risk of that of not sending it. And it's very easy. We can sit down here in 1 or 2 hours, make a demo which will generate better offer for me or generate the text of the letter. But again, having to prove that it's fair, that it's correct. It's just not worth the risk of that at the moment. A lot of customers are with having that navigate this situation. But so technically we can do it much better. But because of the regulation and the risk, is just not worth at the moment. But of course, the research is moving forward, technology is moving forward, so in the future it will be. But that's where the delay is coming from.
Interesting. That's a very interesting use case that you picked. Basically, personalized messaging offers through email communication based on the customer profile, which almost never happens in financial services today.
And there is a reasons for that. Even if you do have even pre-generative AI, having, for example, 5 or 6 templates, making things much more complicated. But as I said, as the reliability of AI and explainability of AI moving forward, we can see that coming in.
Right. Makes sense. And given that you are close to the financial services business, right? How, maybe from a revenue uplift perspective, how important is personalized messaging in financial services? Is that a critical thing? Nice to have? Where does it fall?
There are areas where it is critical.
Okay.
And especially reaching the broader market. So think about, you can have personalization for very, very high value clients where it means because it's done by the person, and it makes sense financially to go through the personalization, but go all through the gates and make sure that the personalization is correct. That makes sense if you are talking, for example, if you are offering loan to the Fortune 500 company, that's fully personalized. But if you are offering loan to a person, that cannot be. So think about that. Now you can expand that level of personalization you have, for example, for largest companies for the SMB, and that expansion of the market. So that's very, very, very critical. And especially if all of your competitors are going to do that, then the institution which will not do that will fall behind. Of course, if nobody is doing it, it's theoretical. But the first few which will do that will make a significant difference.
Makes sense. Okay. And since you're talking about opportunities in financial services being probably the largest with AI, right? How should one think about it? If you look at the structure of the financial services industry, there is the corporate part of it, and there's a retail part of it. In corporate, I guess you have investment banking, capital markets, trading, hedge funds, private equity, VC. On the retail side, there is mortgages, credit cards, personal banking, wealth management. Where is most of the opportunity? How does that stack up, according to you?
The most of the opportunity is actually vertical here, not so across all of this. Because today, let's see what I see as a kind of low-hanging fruit or all is coming in here. One of the biggest part is getting the structured information from the unstructured information. Because you have a lot of documents which are coming in, and there is not too much difference between the commercial loan and, for example, mortgage. You still need to make sure that the documents which are coming in are correct. There are information which are claimed they are or they should be, and it's from simple perspective, is the number on that document in that PDF the same as you expect. These kind of things are, because that's very otherwise it's very manual, and typical OCR approaches are limited use. Because of the flexibility and difference of all of the documents. Even in the retail banking, where you would expect those forms or those documents are very similar. There is so much variability between states or even between the company. So that's very, very across all of this. And that's kind of general use case which I see everywhere, and just kind of different in different form. And the second one, which is probably more on the high volume side, and high volume. Again, I mean, it's in each loans to the small and medium businesses and loans to and mortgage loans are very similar in this behavior, is supporting your Frontline agent, some kind of copilot when we're talking about the finding the right documentation, internal one, finding the right processes. So more on the internal search and the follow-up steps, because those are very complex products.
Yeah.
Of the loans are 20 years old, different procedures, new ones are different, refinancing is different. So that these kind of two categories of the use cases are coming quite handy.
That's two very powerful use cases. I had a couple of questions on that. One is, in the before Gen AI automation, when people were using RPAs like UiPath and Automation Anywhere and all that, what is the biggest difference you see with the new age of automation versus the RPA?
There is a lot of work or research or experimentation on the automation side. I don't see them too much on the production side at the moment. One of the biggest differences here is the reliability, and again the governance. When we are talking about automation, deterministic automation, so when we're talking about the RPAs or even just really writing a script, those are deterministic, so they can go through the very strict security governance processes inside of that, and how you are making the decision. And that's one of the challenges working with the automation with the LLM, where you don't have that where you cannot have that governance. So I don't see. I do see LLM helping with that automation. But I do see a lot of experimentation, absolutely, in making that automation. But there are a lot of challenges in front of it.
Makes sense. Okay. And these when you're implementing AI in both the use cases that you mentioned, the whole unstructured to structured, and the second is the high velocity use cases. The challenges is most of the challenges a technical problem that the models can recognize the proper unstructured data into structure. Is it mostly a technical problem, or is there an internal governance and data problem? Like, where are the problems usually?
Comparing to so of course there is always a technical problem, which is with the newer and newer models getting kind of smaller and smaller. But comparing to the other industries, when talking to the other areas, the governance is much more challenging.
Okay.
To the level that we see I see pretty frequently expectation that the system need to be 100% accurate, need to be 100% reliable. Of course, that's not. We all know that in any statistical and in non-deterministic system, that's not a realistic expectation.
But
one thing which I usually see, or where this kind of expectation from business is coming from, is that because not even people are 100% reliable. That's just reality. But for the processes doing by a human being, you do have a lot of infrastructure around to help manage that unreliability. You do have HR, you do have those people are different, so you can train people, you can discipline and potentially fire that party. One or more, you do have liability insurance. You do have understanding. If something happened, company make an action, and people around understand that these kind of things can happen. If that's happening with the AI, we don't have that infrastructure around. So that's a little bit of the challenge which we need to overcome. That we don't have infrastructure. We don't have the fallback scenario on the agent or fully automated systems.
Makes sense. Okay. You mentioned a couple of very nice use cases. Are there other interesting use cases that you have come across in financial services that you could talk to us about?
There are a lot of them on the detail side. lot of things which are coming in. So, and I talk about some kind of those two are more on the some kind of larger categories, and there are a lot of implementation of those. So, and the best use cases when I'm looking on any company are the use cases which you can actually measure. So, when I'm talking about the high velocity use cases and finding the right information, whether that right information is for example, bank teller standing in front of the user, or for the call center agent on the phone, or loan officer. So those are significantly different use cases. They have very similar characteristics. So, but mostly they are implemented differently, because when there is attempt to build them together, you are starting to have the traditional challenges with the rack type of the application or the database. If you have way too many documents, if you have way too different documents inside of your system, we see that the evals are starting to be much more challenging. The finding the information getting more challenging, or even the metadata, or even information in documents are. So if you have, because you do have different documents and different policies and procedures, for example, for commercial loan and for personal loans, not all the time the informations are actually in, or that metadata are directly in the document. So if you, for example, are trying to have those information in one database, and without answering the question without additional information, is this the personal loan, is this the commercial loan, you can get information about the personal loan while working with the commercial. So high volume, high velocity support system, is a category of the use cases, and there is a different use cases which need to be each of them differently, and they are measured differently, by the way. The ROI, how you are getting out of those, is completely different. If you are talking about the call center, time to spend to answer the question is a different your metric. When you are talking about the potentially longer processes like loans, the quality and the volume of the information and the precise of all of the steps, because that's where we are going multiple steps, is the KPI. It doesn't really matter how long it takes. So, and then you have, of course, something very fast on one side for the call center, and something much more multi-step reasoning agentic type of for the loan officers. Does it make sense?
Got
So
it.
those are we were talking about, it's more category of the use cases, and then those use cases are multiple.
Yeah. And in the use case of this, information retrieval kind of copilot for inside financial institutions, right? What is the approach that is usually used? Is it a RAG approach, or do you see a lot of fine tuning that happens? And how much fine tuning is being done?
So RAG is retrieval and putting things into context is pretty much the norm. Is in most of the cases. Fine tuning in terms of the models, there is a lot of experimentation. Realistically, that was very, very important 1.5 years ago. Much more with the new generation of the models. There's still experimentation, but I don't see them in production very much, and I don't see all of the use cases. Just to be very clear, even working on with most of our customers, those are massive customers.
Yeah.
But I don't see. I do see significant decrease in the fine tuning, and not because the fine tuning is not important. It not going to help. It definitely does. It's just from capacity. There is a massive amount of the ideas inside of the institutions, and the applications are moving so fast that you don't get enough experience or enough time to actually do the proper fine-tuning, evaluation, testing, which base model, all of this process, and you need to be more agile, more faster than waiting for the fine-tuning.
Yeah.
One thing in the fine-tuning which is happening and not happening enough from my perspective is fine-tuning of the embedding models.
Mm.
When looking on the impact, that's so few times what we actually did it with the customers, impact of fine-tuning of the model was very, very significant for their part, and it's not related to the use case, so it can work on different time scale. It doesn't, you don't need to wait for your new fine-tuned model to run the test. You are running your application as it is, and new fine-tuned model on your question just arrive on the background. But that I see quite significant improvement in the performance, and that's kind of typical when you are testing RAG application and testing each of those. The retrieval part is the one where most of the improvement is actually happening.
Interesting. Got it. And given the rapid pace at which models get released by all the labs, how do financial service institutions think about going back and redoing their use cases with these new models? Because many of these things opens up entirely new kinds of use cases. How does one keep pace with that?
So one massive improvement in opening new use cases was moving from text to multimodality. As I mentioned, we have financial services working with a lot of documents. Most of them are in PDFs form and something similar. There's always some graphs or even drawings, even manual drawings, which are was kind of interesting in some of the use cases. So moving from the pure text to the multimodality was the area where I wouldn't say that went back and thinking about use cases again, or thinking about additional use cases, because what I see in the most areas is there is more ideas than can be implemented. So what did change is more prioritization and what we can actually do today. Then let's think about additional use case, additional what we want to do. So that was multimodality was that kind of change, or that kind of we need to think about again. For other kind of improvement, not really. I have to say that models at the moment, 95% use case is good enough, I would say.
Wow.
So that because again, we are talking about the institutions and the industry which need to have that kind of few month delay because of the governance. So we are really talking about things which are in production, and again in production, which were thought through some times ago. With the things which we see today coming in, having agentic approach, multi agent to agent communication, etc. That will again slightly change this situation. But for the use cases they have already in the process, new model does not change significantly. It does improve the performance. That's not a question. But it does not change. Can we implement it or cannot we implement this? That kind of tipping point, we are in most of the areas already past that tipping point. We are just getting better results.
Yeah, makes sense. And inside companies, Boris, who kind of leads these projects? Is it the business team? Is it the IT team? Is it the AI, data science team? In financial services, who's leading these projects usually?
I can't say I see some kind of clarity or trend on this. It's pretty much depends on the company.
Interesting.
Yeah, it really depends on each of the structure. from the beginning, it was very clear that anybody who has an idea, and we saw quite a lot of hackathons and going around.
Yeah.
It now it's more structure. There is more
Yeah.
structure, and how that structure is set up, it really depends on each company.
Understood. Okay. And what do you think the next, I don't know, 24, 36 months future holds for applied AI in finance?
So my biggest hope or kind of expectation is
Hmm.
clarifying how the governance should works.
Hmm.
A lot of the documents, a lot of the original legal, not legal, but the governance documents are from 2012, 2016,
Hmm.
etc. So you can understand that it's not really meant for the generative AI, not for this one. So there is expectation and hope that this will catch up, because one of the things is, because of that regulation is, and it's very well written, that it allows each of the institution then takes their own opinion on the things which are not written
Hmm.
in the regulation, but it means everybody has the different view on the how to run, what is possible, what is not possible.
Hmm.
Getting some kind of industry understanding and alignment on this one, that will make situation much easier
Hmm.
for the companies. I do have some of clients which basically saying now they are in situation that 100% of their job is keeping up with the regulation, with the model validation systems and model validation team. So if
Hmm.
that need to get to some more clarity. And yes, there are good signs that it will happen. There's a lot of improvements going in.
Hmm.
That will release much more use cases on the what can be done.
Hmm.
Second thing is starting to rethink the processes.
Hmm.
What I see today, what I think is kind of most important today is we have the processes as we are. Let's improve those.
Hmm.
We have the processes which are for some part of the market, because we can automate them. We can bring to the another part of the market, to the
Hmm.
mass market and mass marketization.
Hmm.
But what is going to happen, and I see a lot of experimentation, a lot of research going in, is okay. Let's rethink how we're actually doing things,
Hmm.
and let's automate full portion of that, not by moving out of any decision making out of the process and run that process that portion of the process fully automated, and then having decision making on outside of that process simulated. Because outside of financial services, what I would say is agentic approach and the full automation and
Yeah.
the fully automated in FSI. If you take 6 months, 6 months is probably on the edge where I'm even willing to make any statement,
Hmm.
because things are moving so fast.
Yeah.
Uh, I don't see that happening in 6 months, realistically.
Got it. Got
But
it.
there is definitely a lot of experimentation, a lot of hope, a lot of expectation that will move that direction, because we are in the situation that if I move out and say, okay, governance will be taken care of differently,
Mm.
that significant portion of the financial services can be streamlined and automated already today.
Mm. Makes sense. And just to clarify one point on that, when you say governance taken care of differently, does that
Mhm.
mean the regulators keeping pace with the AI models and giving the right governance? Or is it taking the existing governance and interpreting it in the right way so it can be coded into the.
A lot of the governance we need to keep it there.
Mhm.
If so, today with today approach and
Mhm.
today risk profile, there is no way this can happen. I don't see how that can happen.
Mhm.
It's quite challenging.
Mhm.
Um, So let me rephrase it. If the same processes would be not in the financial services, not within the so much money and so important impact in that area, if it would be just just papers moving left and right, those processes can be already automated on the with a reasonable level of reliability.
Yeah.
But of course, we are working with a real wealth, real values. So there need to be oversight. They need to be done. So, but does it need to be done? And here I'm not completely not an expert, so this is complete out of my my expertise. But we need to have at this moment there needs to be a lot of the explanation. If we replace that explanation with empirical, okay, this works because it's 99% works, and we see the evidence that it works, as for example in the research we are doing in the AI research typically, that can be done.
Yeah.
Is it good approach for more working money? I doubt, to be honest.
Yeah.
But there may be work on other approaches which will make everybody more comfortable with this change, and still not need to have that high bar that I actually need to prove that that models are appropriate.
Makes sense. Good.
But this is very complex area, and there is a good chance that actually it won't happen anytime. Of course, we are working with a significant value. All the things are. Sometimes I would rather have something slow, but just making sure that nothing is wrong.
Makes sense. Yeah. That has been extremely insightful and helpful. Thank you so much for taking time to do this, Boris. Really appreciate it.
Thank you.